Hello friends, good week, how are you? Vladimir here, and this is the weekly review for the last week of February 2013. We're now on 24th of February, and let's see what do we have on the markets. Last week was very interesting. Looking back, it turned to be I was correct about the euro dollar when I called 135, 137 as a stop. The euro dollar spiked at 137, all the rest is history. It's now below 132. Well, beside that, very interesting thing happened, and as I posted on my blog, if you have had the chance to watch that, the euro dollar broke through the bank's level, which is 132.40.80 range, and through this wonderful trend line. There is another trend line here that still holds, as you can see, right? Still holds a bit. This the spike trend line. Now it's kind of breaking or holding. It's, well, confusing. Watching the weekly chart, the euro dollar right now is on its 20 MA. RSI still above 50, and as you can see, MACD still holds above the zero line, which is kind of a bullish sign. We go down for the 4-hour chart, down back to the daily chart, and what do we have? We have a bullish hidden divergence forming below this, between these two lows, right? As you can see, here and here. This is a bullish hidden divergence. After bullish hidden divergence, we need to go for one lower time frame to find a bullish divergence from regular or continuing type or extreme type. And well, do we have that? Kind of, because MACD was very low. It was not extreme, right here. It was not extreme because we have had lower low. But RSI was playing around the 20. There is no two lows here, so it's very tricky. The current situation is very tricky. Two things could happen. One, it will break the last low and will take us to the next level. If you pay attention on the daily chart, the next level might be right here, 131, right? Or even bit lower, around 130.50. The second scenario would be if we go for the 1-hour chart. What we have here is kind of megaphone or something like that, right? We have 1, 2, 3, 4, 5. Maybe we're now going for a 6. Now pay attention. Megaphone could be like that, or could be like that, with the close, and it will turn out to be the bearish megaphone, right? So this range, this levels, is a level to see what's going to happen. A clear break above this 132.30 and or even 132.35. And hold above this level should open the doors for the euro dollar to rise higher. How much higher? At least testing this broken trend line, which is around 133 or so, right? And this is the first thing. Now, if the euro dollar will successfully break and close above 133 again, that could be another bullish sign. Personally, I'm a bit doubtful of that, but because what I just saw you on a weekly chart, and the fact that the pair still holding the weekly 20 MA, MACD 0, and RSI above 50, still could provide easily bullish environment to the euro dollar, at least for some pullback up. And the thing is that I do want the euro dollar to break below this last support here, which it holds, as you can see, right here, in order to take it down to 131 or even 130.50, or even to my final target, which is here around the 20 MA, 200 MA, or even a bit lower, something like in between 127, 128, maybe even 129, 127, 121, 129 range. This is my level, my final level for the euro dollar. And that's the scenario. That's how I plan to play the euro dollars. have clear range for up, have clear range for down. Definitely the last down move was very impressive. This head and shoulders on this top was broken, taking the pair down right now. And let's see how it continues. It's still bearish. Now it has to break below the current support in order to continue lower. And pay attention also to this line, as you can see, right? The spike line, right then below that. So all these levels could resistant to the bulls that could attempt to buy the euro dollar. For long run, only if the euro dollar places itself above 133, that should open the doors for a bullish move. And then, well, that's the numbers. Going back to the pound dollar. Pound dollar, from my point of view, is very, very, very interesting pair. First of all, on Thursday, it created a bullish hammer, which is wonderful buy opportunity anyway, as it is. All worked perfect, and then on the last 1.5 hour of Friday, on the time that no one trades, the pound dollar went all the way down, closing as a Marubozu. On the weekly chart, it is not a Marubozu, it's just an official strong bearish candle. On a daily chart, it is a Marubozu, of course. Marubozu and hammer are bearish, are a bullish sign. But do you know what happened on the last hour? Morris said that they're going to cut the perfect level of pretend credit, and it immediately affected the British pound rate. And the thing is, what's next? Well, I said it not once. Pound dollar is going to create one type of divergence. Here, pay attention for this level. Okay. Put it here. Okay. On this level, as you can see, right, the pound dollar tried to make a stop right here. From my point of view, this 154 level would be the at least level the pound dollar will retrace to. But the question is how and if we should trade it. I think that if you trade the pound dollar investor style, it's time to be in. Especially now with the reducing of their credibility. And now everyone starts to talk about a pound dollar is going back to 140, maybe even lower. I can hear more and more and more voices of that, and this is the time to get ready to buy the pound dollar. It's very close to the extreme divergence. RSI could be below 20. Last time it happened was here, and we all remember what happened to the pound since then. It rises all the way back to 163. Now I don't claim it's about to happen again, not at all, but I do think it's about to create a bottom. This bottom could be the current support level. It could be lower, around 150, 149. It could be even lower for the next level, around 146, 147. Each of these levels is able to stop the pound dollar and make the retrace. From my point of view, the days of this down move, the current way of the down move of the pound dollar, are about to end. And this is my opinion for the pound dollar. Personally, I'm already in. I started my buys investor style. If you wonder still what investor style means, first of all, I invite you to the club. Second of all, and just to make it with general explanation, negative leverage, no stop loss. Treat it as investment. That's exactly what investor style means. Buy it as investment. And this is wonderful time from my point of view. As I said, I do think this down move will be limited. It could last a bit more, 150, 149, maybe a bit lower, maybe to create daily 20 candles right, for example. Create a stop here on around this range and take us back. I would say 154 at least. At least. This is my opinion. And how does it affect the euro pound, which is a pair I was looking for sell opportunities, and I'm still looking for sell opportunities. Now let's take a look. If not the fact from Friday about the British pound, I would clearly say this false break will take the euro pound all the way down to 083, 082.50 easily. This is the level here, which I think will be retested later or sooner. As I said not once, there is a trend line. This trend line will be retested by the market. The question is when and how. Now, based on the daily chart, we have had a false break. Again, if not the news, I would not even consider this to be to fail. But because of the last news from pound, very likely, not sure at all it's about to happen, but very likely that the euro pound could try to push it a bit higher, 088, maybe a bit higher to 089, 090 range. Weekly chart, pay attention, is dancing around the top. RSI already was around 80, which is extreme. Last time it happened was here on 2008, and we remember how the market affected then, right? So each of these levels, from my point of view, is the last high on a weekly chart. And on daily chart, of course, there is a divergence already. Now here it was perfect because it created the next high. Because of the news, very possible we will see the pair pushing a bit higher. Let it go. Don't try to jump in just because. Let it go. And with the next candle pattern, we are still on a divergence. With the next candle pattern on any of the levels, once we'll get a candle pattern and MACD turning its slope down again to the bearish direction, that will be the time to sell. And remember, this trend line is the final target from my point of view. And this is the range actually, which I think the market will have to retest again later or sooner. Here, I think each up move will take it back to here. And if I have to put some lines, I would say that somewhere in between middle of March all the way to even end of April, I see it happen here. It will take time, maybe even bit longer. That's pretty much what the meeting of the lines tell to me about this pair. Let's continue. Just in few words about the yen pairs. Nothing new from my point of view. As I said not once, for long run, I think we will get strong bearish cycle. We are coming now closer to March. March and April are bearish months based on history to the Japanese pair. I would not be surprised if the euro yen will take us back to 115, 118 range, but based on a daily chart, there is a bullish hidden divergence. So it could now turn around, go for another high, which is very, very, very possible. Turn out from here, push it to another high, 130 for example, 132 for example. Create then a weekly divergence, and the combination then at the end of March, beginning of April, for example, will take us then down to something like 1200 or 1500 points down move adventure. So as I said, from my point of view, for a long run we will see new highs, but these new highs will not be created without a strong bearish cycle. So far it was 300, 400 bearish cycle. It's not enough to gain another 2000, 3000 points up move. No. That's why I think if we will see new highs here, which is very likely, then I think that the down move will be even stronger. Will last all the way to the summer, and after the summer I do think we will then gain the next bullish momentum. Same about every Japanese pair, Aussie yen, pound yen, Kiwi yen. I can go on. It will be exactly the same. The pound yen, by the way, is the only one acting bearish already, and that's not because of the yen, it's because of the pound. And taking a look on a daily chart, still there is a bullish hidden divergence. Could it last all the way down to 138 and then create a bearish convergence? Yes, of course. And that's why I still keep my bearish opinion for a long run, for a bearish cycle. I do see the pound yen reaching again 138, maybe even 136, maybe even 134, and then most likely creating a stop and pushing all the way up again. This is about my opinion about the pairs. And now a very interesting pair, and that would be the dollar Canadian. I think dollar Canadian is reaching a top for a short period. I do think we are in front of a bearish correction down, maybe back to 101.30, maybe back to 100.80.90, maybe even a bit lower, but then I do think it's going to go up again. Why? Weekly chart broke through resistance. Weekly chart broke the Bollinger Bands. RSI broke its resistance again. But what still we have? We have a weekly trend line, right? And this trend line, if we measure it from all these highs, you see that here, all these highs, it's still meeting us pretty much on the same range, as you can see. This is very critical resistance, and this is exactly the reason why I think for the short run we're going to see some correction. Pay attention for the daily chart. Daily chart RSI is aiming to close to 80. Last time it happened was here. Last time it happened, that happened. I don't think it's going to happen again. I don't see such down move as for now. Market might change. As for now, I do not see that. I think we'll see some reasonable correction down to 101.30, 40, maybe 100.80, 90. Then I think we will push to new highs. And how to enjoy that? Go for the 4-hour chart. There's a beautiful divergence, and with a false break, you can go for a false break and try to, when it completes, try to short it to the mentioned targets. There was more than 20 candles right, so it has to close the down, the bottom of the Bollingers again, later or sooner. And this is how I think the intraday sells, because it's a short run. From my point of view, that's the best sells for this pair. In case it pushes higher, pay attention to 102.50.60. Pay attention to 103.10.20 here. Very reasonable levels which could start the correction down. And the rise of the dollar Canadian caused a beautiful bend to bend move on Australian Canadian. Now pay attention for that. On the weekly chart there is a monster divergence range for the Australian Canadian, as you can see, right? It's trying to break up. I'm not convinced it's going to success immediately. I think right here or in between this range it's going to make a stop. That's a beautiful bend to bend, pretty wide. And on the 4-hour chart there is no divergence yet, and that's exactly why I think it's still able to push higher. Once it creates in between the range, once it creates a divergence on the 4-hour chart, it's time to sell the pair with the trend line as a target from my point of view. That's how I see the things. So if I draw the lines, I do see something like that. You see the line in between these lows? So from here I do see potential rise, then a divergence on the 4-hour charts created here, and back drop down. It could be 150, it could be 200 points approximately, of course, depends on the quality of the move. I think we'll get soon a good short opportunity, and of course each short is an opportunity to buy, because the both daily, both weekly charts still has more to go. That's about this pair. Kiwi dollar will be my next pair. This is a daily chart. I was talking about this channel. You know this channel already, and I think once it will be broken, we will talk short. Please follow this channel. It's monster channel. Pound Kiwi. I was talking about this pair long time. As I said, this pair might go for 179, maybe even 175, maybe 170, or even 165. This is a perfect opportunity for investment, like the pound dollar. and I think the best way to trade this pair is to buy weekly bullish candle patterns for a very very long run, talking for months or maybe even more than 1 year. There is a monthly monster divergence forming, and that's exactly what I see. I see a down move lasting here, the divergence created, completed itself, and then all the way up back to 196 at least, and my final target will be around actually 240. That's the huge potential this pair has. Again, the best way to buy such pair, I mean like investment, of course if you want to trade it on the short term, it's nothing to do with the weekly chart and the monthly chart, but as an investment, with an investor style, buy only and only weekly patterns. That's the best way from my point of view. Or at least if the daily chart will have something classical, I don't know, like a Murray or a huge hammer or something like that, of course, but not by every small candle. No. And I'm going back to commodities finally. I was talking about this down move for the gold. It happens. It finally happens. Gold is there. Gold reached the 20 and pushing it back. Is that the end? Not convinced. I think 1593 up to 1610, 1620 is the range is going to stop. I do think it will push lower from there, maybe back to 1530, maybe even down to the level I was talking about on the previous year, 1425, 1430. Before we can talk about long term buy. For the short term, I do think we still have more to go. 1593 up to 1610, 1620. This is the final levels. I do think it's going to stop. Then I think it's going to retrace down, go back to 1540, 1530, and maybe even breaking below this level would open the doors for a further down move all the way to 1425, 1430. In case the gold is breaking again above 1630, 1620, 1630, and this trend line, this daily trend line, okay, then I will have to reanalyze the current bearish scenario and maybe even change it. As long as it's not happening, all the buys are for the short term. Same, of course, about the silver. I do see smaller trace, maybe back to 29, 29.20, 29.50 maybe. Then down again, I do see a bit lower levels. As I explained, the weekly chart might create an inverted hammer, which means we can go back to 27, 26 even, create here a bottom and pushing them up again. And a few words about the indices. Thursday, Wednesday, Thursday were very bearish days, and now the indices on Friday turned up again, as I said, and I say that not once. It could be very tricky here. For long run, I have very clear opinion. If the US indices will not complete a strong correction down and will try to create new highs and will last that closer to summer like May, June, July, that could bring a disaster summer. I hope for the markets that the indices during March or April will complete a down move for 5 up to 10%, maybe even more, because that's the natural cycle. If it will not happen, I suspect a crash. Let me explain you what I'm talking about. Let's see the weekly chart. This is S&P, for example. Now take a look. When did we have big moves down? We had one here, we had one here, and we had one, of course, here and here. Let's start from this big one. This was a straight move on 2011. You see? During the beginning of the year, it raised up. Then March and April, actually April, it did a small correction. Small correction. Because of that, it tried to create another high during the summer, and then we got a huge down move. Huge down move. Same happened on 2010. Take a look on this rise. Up move all the way till May. Straight move till May. Without corrections, then bam! Down move during the summer. And of course, unforgettable, 2007. We got an up move, right? Since February. All actually earlier. You see that? But since February it was straight all the way up without big correction to the summer, and then it started first crash, then up again, and another crash, the historical crash of 2008. I don't want to sound like pessimistic, no, I'm just talking facts. This is a fact, and that's exactly why I hope during mentioned February and April, sorry, the indices, the US indices will create correction down, deep correction down. If not, I will be very, very, very scared that the monthly divergence we are forming here will turn to be monster down move during the summer. And that's the same for Nasdaq, for S&P, and for the Dow. It's exactly the same, and that's what I personally afraid of very, very much. If it makes a down move right now, that would be natural cycle. If it keeps pushing, the next down move will not be cycle. It will be a crash. And I hope that the market will know to avoid it. That's all, friends. That's my trades, that's my pairs, that's what I go with, that's my opportunities, and I hope you will enjoy that, of course. Thank you very much for watching this video. I wish you a wonderful week and good trading, and I'll see you on the next week. By the way, on the next week I'm on Riga. On next weekend I'm holding their guest seminar, so I'm not sure if I could upload it during Saturday, Sunday, the next weekly review. Maybe it will be on Monday when I back to my office. Thank you very much once again. I wish you a wonderful week and good trading. Yours, Vladimir.